Welcome to Trading Lounge and the European indices for the 11th of March. I'm going to start on the tick chart here. I know it's messy, but I want to show you how I've counted this here. So from the top here, I've counted as 1 and 2 here and 3 here and 4 here and 5 down through here, which can be the A wave, a B wave and a C wave down to this particular point here. Now on the Asian markets, the Australian markets, we've counted this down here as 1 and 2 and 3 and 4 here and 5 coming down through here. So let's just go in here. I just want to show you what I've done here. So at the top here it's a little bit tricky, but I've got it as 1 and 2 and 3 and 4 and 5 here for 1 and 2 here, and then 1, 2, 3, 4, 5 here for 1 and 2 here, and then 5 waves all the way down here for 3 and 4 here, nice strong third of a third here, and then that leaves us with this here of 1 and 2 and 5 waves here for the third, the fourth and the fifth for the third, coming back for the fourth here, and then having 5 waves coming down here for the fifth wave here in terms of 1 and 2 here, and all the way down here for the third wave down through here, ABC for the fourth and down for the fifth. So it counts very much like the US markets here, down for this here, as an A wave and a B wave here. Now, and then that leaves us with 5 waves down here. Now this 5 waves down here, we could look at this in a few ways. If we looked at it with the Asian markets, we'd call this down as wave 1 all to this particular low here. If I was looking at the S&P, I'd look at it like this here with the wave C here, and the same with this market here. The other point here too is that this is where it gets, we just need to get a bit of tactics into this, because from this particular high here, be it wave B or wave 4 or whatever, then we count 5 waves down through to here. Now we just got to be mindful that this 5 waves down here could also be wave 1 here, and then we just go up for an A wave here, a B wave here and a C wave here to cover this gap here at 61.8%, and then fail from that point. So I'm thinking that we just go step by step here. Yes, we can go long here. This if I open this up here a little bit, this move up off the low here, everybody's probably got it counted a little bit differently, but I've got it counted as wave 1 here and 2 here, then 1 and 2 and 3 and 4 and 5 here for 1 and 2 here, and you can see 5 waves here for the third, the fourth and the fifth to make the third wave there, and then the fourth wave here, and then the fifth wave to the upside. Now the point here is that we've got 5 waves here, so after a sharp ABC correction, 61.8% and all that sort of stuff, then we'll be pushing up here, and there should be some sort of equality between the length of wave A here and wave C here. So that takes us to the 50% mark and the 61.8% mark here. So yeah, I just think that, you know, this 61.8% mark here, let's just say that the closest largest number here would be 11,500, which actually brings it in at a medium level here. So I'll just put this in here. So 11,500. So that's very close on the 61.8%. That's a serious number. I know people don't really consider it much. It doesn't seem like much, but it's the halfway between two major levels, 10,000 and 13, and it always plays out quite nicely. So that's the target for the retest coming up through here. Will it get that far? I don't know. I mean, I could count 1, 2, 3, 4, and 5 just to get to around here and fade. So we just need to keep an eye on that. Yeah, that's sort of about it, really. So when I count it on the tick chart, as I just mentioned, I get 5 waves down to here, then a correction, then another 5 here. So it could be an A wave, a B wave, and a C wave here, finishing here, and then pulling back up 61.8%. So in that tick chart here, I've just got it moving up to the 61.8% here and failing. And there will be some sort of reaction here for that. The other point here is that if we take it from the top here roughly and down here roughly, then the 61.8% here is obviously higher at these old highs here. So that would be the other target area through here. So, but that's okay because because if we get support on this level here, we would trade to this level, get out, and then if this level became the support with the classic trading levels pattern, well, then we would move up from that point. And then we also got to be mindful too that if this is an A and a B and a C wave here, perhaps we could even go much higher than this as well and take out those old highs here. So this is the point to have a long trade sitting in here, and yeah, and we'll just work that to the upside there. So there, as I mentioned, there's other ways to count this down here, and I can't really compare it to the FTSE, even though the intraday is doing the same sort of thing. Actually, I'll just go back to the hourly chart here for a second. So what we're going to do here is go, I mean, I wasn't there at the time, but that would have been the better place here, obviously, to do that. But we could go along here. And we'll want to keep the stop 61.8% below the current price here. Okay, so even further, 72 would be about nice, or just below that. But anyway, I know that we shouldn't breach that there again, so we'll just keep that out of the way though. And we'll look to go higher. So we will look to, obviously there's going to be a dance across this 11,000 area through here. So we'll see some sort of reaction, a first high above the level, some sort of ABC pattern here, and then up there. It won't be as large as that, but you could also add to the position here as well on there. So what about if I remove that? Because once that becomes the support here, once you've got that dance here, that means it's tested, it's going up there further. So we'll look to cover that gap there, but the 11,500 is also there. We don't need that short trade thing there anymore. So that's where we are there for that. I mean, this will be an A wave, a B wave, and a C wave here, but I don't know if it's going to be of blue degree or green degree. So I'll just leave it for the time being. That's sort of okay. On the 4-hour chart here, this is how I would count the Asian markets down in this, and bring it in line with this would be sort of fine, really. And in that case here, we would be going much higher at that point here. But I just want to see, you know, I mean, first of all, if this is breached here, you can short at this point. But we'll get a higher short up here somewhere. Once that develops, we'll be able to put a line through here and go that way with it, and short from this line here. Just in case this is wave 1 here, going back for wave 2 here, and then going down further at that point. It's not out of the pit, you know, it's not, I've got to think of everything, you know, because we need to be, I mean, the trade signals are more important than the wave count as such. So that's what we're looking for. We're looking for probables, or high probability signals. So that's what we're looking at that point there. So, yeah, that's that. And the FTSE is, you know, it's doing its own thing. Even in the bigger picture, it's doing its own thing. So in the bigger picture here, we can label this wave 4 here, and we've got 5 waves up here for 1 and 2. We've got 3 waves here for this. Wave 4 here overlaps that. That's a no-no in Elliott. So I don't know what to do about that, but I just have to move over to the most probable sort of answer at that point. Otherwise, we have to make this a whole B wave up the top here. Now, this move here, hasn't taken on the DAX. This is higher on the DAX of this high here, but on here it's not. And we can look at this as an impulse wave here. So we could look at this as an A wave here, an A and a B and a C for wave B here and wave C here. Or we could look at this as 1 here and 2 here and 3 here. I mean, it certainly looks more like a C wave, a third wave coming into play here, you know. This is just the 50-60% retracement level area through here. So we could label it A and B and C here, or we could label it 1 and 2 and 3 and 4 and 5, coming down through to here. So yeah, so this is what we've done here before. We could label it wave A being conservative and B being conservative, or wave 2 here. I mean, it certainly looks like this here. So once again, the same thing here as well. We've got a medium level here like the DAX, but this is 6,500, halfway between two major trading levels here, 5,000 and 8,000. And the DAX has got it as 11,500, so it carries the same weight as well. So we're looking for the same picture here. So we're either going to be going up to this here, or we're going to be going up a bit higher here from this here. So taking this top here to this low here would end up a little bit higher. So we just have to go step by step. We just have to stay with the evidence. That's all we can do. You don't want to start believing. So based on that, just check this out. So this is what we were looking for before. I would like to check this here, this structure here again as well here. I must check that, so I will put a little question mark there for that. Anyway, for the time being, we can put this, move that into place there now. There's definitely 5 waves in that, so that's cool. That wave 4 sits on the top there. No, that's right, I can see it now. It's all right. Just looking for 5 waves in here. So we've got 1 and 2 here, and then we've got 1 and 2 and 3 and 4 and 5 to here, and 4 and down for 5. So that's cool. So we've got those 5 waves there. So in the first instance here, we could be looking for an A wave, a B wave, and a C wave to fail from here, just in case this is going to continue to cascade down here further. That's what I'm concerned about. So we can look at, you know, once we get support on this, there's going to be the arrival, the reaction, the first high above the level, some sort of, this won't be as big as this, but, you know, if we get that sort of pattern here, then we can go long in here as well for that. But otherwise, if it's going to fail, it's going to fail from there, right? And we need to be mindful of that, and we need to be looking for short trades from that point. You know, we need to know where to go short within this, at what point is it going to be confirmed. So that's our thing. So for the time being here, if I can just go maybe to the hourly chart here. Look, if you've been short here, you need to get out now. So we'll just move that and we'll put that here. I know there's risk going, it's going to be a hard shove here for this. We need to keep this out of the way as well. You know, if you've got an account that's, less than 30,000, you don't want to be risking more than 1%, 0.5% would be nice, but that's sort of over 50k in that account. And Ryan Jones, he's got a good money management system, if you're looking for one. Won't go into that now, but anyway, this is the same situation here as well. So we're looking for the A wave here, the B wave here. I don't know if it's in blue or green. That's my problem at this stage. I'm just staying open. 15-minute chart here. Yeah, we'd been counting this one slightly different here, but that's same, We do need to be a little bit careful about this actually. So, I mean, let me just check on the tick chart here. We've got a bit of time. Have I done this? Yeah, this counts differently from, if I can just, you see this is the A, the B, 1, 2, 3, 4, 5, or even 4 and 5 here, because this doesn't move off, doesn't really give us a nice 5 waves up here, unless it's 1 and 2 and 3 and 4 and 5. It's just not clear, and if it's not clear, I can't do much about it. 6,000, 1, 2, 3 here. I mean, what we can look for here, like I said, there should be some sort of equality here for this. That would leave us very close to that, so we should see that move up higher here. I'm just not sure of the wave count, that's all. I'll have to look at some other markets, see if it pops out for me. Yeah. So if you do go long, this is probably a nice target area here, 6.3 or just above 6.3. That's where it's going. It's going to have problems at 6.2. It's going to have problems at 6.3 here. Alrighty, I'll just leave it at that. Thanks for tuning in. Sorry for dragging it on. Cheers.